Hello, this is Jordan, and this is your precious metals market update. This is being recorded on the evening of Tuesday, June 16th, 2015. And the first thing I want to get into, which Colin from Palisade Radio wanted me to address, is the potential for this move. I mean, the question of it, is there potential for this move to go below 1,000, maybe even below 900? Um, and essentially, my view on that is no. There's no chance of that happening. I'll tell you how it could happen, but I'll get to that at the end. Um, People need to be careful not to get too bearish. This is a very long bear market here, and so expecting a huge decline. It's just it reminds me of I mean, these targets of 800 or 700 for gold remind me of when the S&P was below 800 or below 700 and approaching its bottom in early 2009. Remember, it bottomed at 666, and there were calls for 500, even 400. So, I mean, I've seen some people, multiple people actually pointing out that maybe 800 or 700 could be a target in October. I mean, you're talking about a 33% decline in 4 months. There's just tons of reasons, both fundamental and technical, why that's not going to happen. Um, First of all, I mean, just look at this bear analog chart here. I mean, and this kind of typifies how bear markets work. The real severe bear markets that lose 70% or 60%, they happen around that 2.5 to 3 year mark. The bear markets that tend to be a lot longer, they're not as severe in terms of the price decline. And that's because the longer a bear market is, people are already out of that market. Who's left to sell? So, I mean, what we're talking about as far as gold right now is a technical breakdown, the potential for that, and then obviously it could fall down to the next really strong support around 1,000, where that could be the end of the bear market. But another reason is gold against foreign currencies has already bottomed. I don't want to show the chart, but it's above its 80-week moving average, and the 80-week moving average is rising. So that tells us that in real terms, uh, gold is fairly strong. It's not at the moment. It's going to get weaker because it's correcting the big move it had earlier in the year. But the point is, gold is not weak against every currency. And fundamentally, to have a decline happen like that below 950 or 1,000, you really need to see a huge rise in real yields or real interest rates, which I don't think is going to happen. Now, how could that happen? How could we see gold go below 900, touch 800 or 700? The only way that would happen is it has a big rally or big rebound into next year, and then it comes down after that. And in fact, we're in a secular bear market for gold. So that would be the way that it could happen. So it's not going to happen anytime soon if it's going to happen. Now, moving on here, this is another big picture view, and you can see that the levels here are very clear. I mean, the two strongest levels are actually 1,500 to 1,550, and then 1,000. But on the monthly chart, you can see just below 1,000. So that's why I'm saying you could see gold go below 1,000, perhaps similar to what we saw in 2008, when if you look at the daily chart, I think gold bottomed just above 700, but I think it printed a low even below 690. So keep that in mind. But anyway, the point is the strongest targets here are, or the strongest price levels, 1,550, then around 1,000, and with the next strongest level you can see is 1,180. And even if you go back before 2013, it was clear that 1180, that was a potential level where gold could find a low, and gold's been basically trading around 1180 for the last 2 years. And so if gold loses that level, what's going to happen? Judging from this monthly chart, the next strong support is basically around 1,000 to 1040-ish. So now, I don't know if the bottom's going to be at 1040 or 975 or 1,000. We don't know. But looking at this chart, we can see that the next strong support level is around 1,000. And then, assuming gold bottoms and has a nice rebound into next year, and it gets back into a bull market, the first initial resistance is going to be 1180, and then the next after that is likely to be 1550. So that's something to keep in mind. Actually, something I just thought of looking at this chart. It makes sense. If gold makes a low around 1,000, the first major resistance is going to be 1180. And there's a couple things I want to talk about in this last chart here, which is a daily line chart of gold. And it shows gold's 50-day moving average in blue and the 200-day in red. But the first thing I want to mention before I get to that is we see this wedge pattern here, and it's kind of a falling wedge. It's not a typical falling wedge pattern, but we can call it a falling wedge. And typically this kind of pattern leads to a move in the opposite direction. So when the wedge is pointing up, the market breaks lower. When the wedge is pointing down, like this one is slightly, the market breaks up. Now, that doesn't mean it happens all the time. You can get the unexpected opposite move where it moves in the same direction and you don't get that reversal. But when you have that happen, and so in this case, when you have a wedge pointing down and the market then breaks lower instead of breaking up, when it breaks lower, I mean, that's really an end to the selling. You could see a strong move down and then a quick rebound. So in simple terms, the way this pattern is setting up, if we see gold break below it, which I expect, and then gold really starts to accelerate lower towards that strong support around 1,000 to 1050, it could be setting up for a V-type move, or a V-type rebound, I should say. So that's something to keep in mind. But back to the 50-day and the 200-day. In this chart, I've highlighted recently the times when gold has been trading below its 50-day and the 200-day. And so that is a very negative short-term setup, and we see that again. The last couple months, gold did rebound and it got up to the 200-day moving average, but it failed. It couldn't get above it, and now gold is below the 50-day moving average. It's kind of gone up a little bit this week, but even today it closed at 1181. As I'm talking about this, it's trading below 1180. The 50-day is at 1194. So I know we have some Fed news tomorrow, but even if something good happens, gold could pop up to 1194, but I don't think it would trade over that. And even if we do get a bigger rally, I don't think gold would go higher than the 200-day moving average. So it's kind of in a precarious situation here where if gold turns lower and it breaks below 1170 again, then it looks like it could be in trouble and headed for that breakdown. I mean, just look at the yellow parts of this chart. You can see gold is, when it's below the 50-day and the 200-day, it's setting up for a potential significant move lower. And we got that important weekly support at 1150. And so that's basically the situation here. I mean, I think if we get something good happens with the Fed and gold pops up, I think that would be a shorting opportunity. I just, the way I see things right now, it looks like the month of July, you got to be careful because there's potential for it to be pretty ugly and get that breakdown. But make no mistake about it, this bear market is almost over, and after we get this breakdown, we're going to be very close to the start of a new bull market and a great buying opportunity. So keep all those things in mind. Thank you so much for listening and watching to this video. Hope you enjoyed it. You can follow more of my work at thedailygold.com. If you have any comments, you can send me an email. That's all for now. I wish everyone the best of luck in the days and weeks ahead. Thank you.